Hey everyone, Tom Gentile. Welcome to Tom's Trading Room. You know what we do here. We show you how to spot opportunity and create alternative trades other than simply buying and holding stocks. Do me a favor right now. Before you hang that stocking and trim that tree, hit the like button below. It really does help support and grow our channel. All right, so what I want to do with you now is that I want to first say welcome to December. The second thing we're going to do is we're going to take a look at where the markets are technically and seasonally as we enter the final month of 2020. I want to look at the overall markets. We'll take a look at them using Fibonacci. I also want to take a look at a December calendar. What type of news is out there that could impact the month? And finally, let's take a look at the money calendar and a couple of opportunities that it's bringing during the holiday season. Let's get over to not those screens, this one. Okay, so let's first start with the overall markets. I have a chart of the S&P 500 ETF, SPY on the screen. We're going to go back and look at Fibonacci ratios. And so first, with the S&P, not much to look at here as we are sitting on what we call all-time highs. We are very close to taking out those opening highs that occurred a couple weeks ago when Pfizer broke news of their vaccine, their COVID vaccine efficacy rate. And so remember that we had that big pop up and then everything pulled back. We're about to take that pop out to the upside here very soon. So let's move on to find some charts to see what is confirming and what is not confirming with the S&P 500 to get an idea of what the plans are for the month of December. So I'm going to move to TLT. Here is TLT, and you can see that TLT is doing the exact opposite of SPY. Lows on TLT during this 6-month trading range are around 155, and so that was the basis for snapping the highs that occurred, 170.157, to the lows at 155.16. We had a pullback. Last week we hit the 38.2% fib range, and we bounced off that. Now, if this is moving lower, as long as it's not in a free fall, this is good for stocks. And so if we indeed hit the 38.2% retracement level, then stocks may have a bright Christmas holiday in front of them. Next, let's go to UUP and see what cash is doing. Cash is doing the exact same thing. Cash is actually completely the opposite of stocks right now, as cash is hitting lows. They're fresh lows for the UUP, that's the PowerShares Double Dollar. And so as this goes down, what goes up? Stocks, other types of assets, foreign currencies, and also commodities. Let's take a look at USO. This is one, folks, I got it wrong. What can I say? I see USO as a seasonal bearish opportunity. However, because of the drop in the US dollar especially the month of November, we saw stocks and we saw commodities like USO run up. In fact, the oil market was one of the best performers for November. Where do we go from here? Well, in this case, we've recently taken out the Fibonacci range, and now we expect to see USO at least trend higher. I still believe that once we get past the holidays, and if we do get a continued surge in COVID-19 and we start to see cities lock down, that will be bearish for USO. But right now, just looking at the charts and looking at the technicals, new highs. So right now we see no resistance when we're looking at this 6-month fib level chart. GLD. All right, so I am a long-term owner of gold, but as a trader, I had a line drawn in the sand on GLD, and it was right around 175. As you can see, we went from 158 on the lows back in May all the way up to, this was right at the beginning of August when we hit 193.89. That was a closing high. Since then, it's all been about lower highs and lower lows. And we're now down, moving into some fresh lows. Well, my line in the sand got taken out last week when we dropped below 175. So now, as a trader, I am waiting for a buying opportunity. So that's stocks, bonds, currencies, commodities. If we were to take a look at the cryptocurrency markets, and I'm going to take a look at it right now. Here's what's happening with Bitcoin. As you can see, the highs that occurred back around 19,500. right? Within 2 days, we dropped all the way down to the into the low 16s. Well, guess what's happened since that was Wednesday, Thursday, Friday, Saturday, Sunday. All right, markets were closed during the weekend. However, look what happened come Sunday night into Monday morning. We are back above the highs, the all-time high. We're going to be catching up on real soon here, but we're back around the 2020 highs as of this video, trading around 19,239, as you can see. And of course, if you've seen any of my videos on crypto, you know what I have as far as long-term for cryptocurrency. Let's take a look at the calendar for December. And what I've done is I've gone over to tradingeconomics.com, and what I'm looking at here is just the important dates. We have news that comes out all the time, but these are the big dates that are coming up, and this is Friday, December 4th. We've got balance of trade for October coming out. We also have November's non-farm payrolls. That's the big one. All right, non-farm payrolls, previous month we had 638,000 jobs created. The forecast and consensus is for 500,000 new jobs to be created for November. Thursday, December 10th, we've got core inflation and we've got inflation rates. Nothing really big there, but these are both forecasted to be positive. We also have retail sales. This is going to be an interesting one because retail typically does well in December. However, we've discussed the shift and the shift that has occurred where Black Friday sales are happening earlier. They're happening well before Black Friday. Does that mean that the Santa Claus rally is going to get cut short? Well, that's what's been happening. But retail sales come out this is on the 16th of December. And as you can see here, there's a forecast of a small increase on retail sales. We also have personal income and personal spending. That's coming out on December 23rd. And the 24th, the durable goods order will be out on that half day of trading. Now, you want to take a look at my calendar? All right, so my calendar shows something a little bit different. We take a look and go back. For those of you that haven't seen this, this is a calendar where I take 10 years of data on the world's most popular stocks, and I am looking for patterns. And I'm looking for patterns where we find the best day to buy and the best day to sell. If I have green on the screen, that tells me there's more bulls than bears. If there's red on the screen, that tells me there's more bearish opportunities than bullish. Right now, I'm looking at December 2020, and as you can see here, we're seeing a lot of green on the screen. This week, a lot of green. We end on Friday with 84% bullish trades. So out of the thousands of stocks that trade, 49 are showing patterns that have better than 90% historical probabilities. Right, so 84% of those are bullish, 16% are bearish. Look at Friday the 11th. There's 114 potential trading opportunities, 89 and 11 to the bull side. And then finally, as we get into the 18th, 143 trading opportunities, 140 are bullish, and only 3 are bearish. So as you can see, as we go into December, things look rather bullish for the stock market. Let's look at a couple of days and see what's actually popping up as potential trading opportunities. So Friday the 4th. And what I like to do is I have all of these columns here that I can search from. I can search from what's given us the best net profit, accuracy, average profit per year, when's my ending date, when's the last time we had a loser in this pattern, and this is in years, and finally the power meter. The power meter gives me a ranking of I call it the what have you done for me lately column. And so I'm looking for the higher this number is, the more the pattern is working now, much better than it was even 5 and 10 years ago. So I'm going to double click on that power meter, and I see that Intuitive Surgical is up here on the top. We have a pair of Googles, NOC, Home Depot's on here. As you come down, Adobe, OLED, there's AMD, there's Lowe's, Home Depot and Lowe's. So home improvement. I also saw KMB in here as well. KB Homes is on here. So we're seeing some home builders. We're seeing some durable goods stocks like Whirlpool. All right, T-Mobile's in the mix. Technology as well. And so tech, and I see home building, and I see some durable goods in there too. That's what we're seeing in our top 10, 15. All right, let's just take a look let's start with the one at the top, ISRG. So when I look at ISRG, it's showing me the patterns between December 4th and January 14th. I can see that on the pattern you see here in front of you. If I scroll down, I get a little bit of information on this, and I see, all right, this is actually maxing out. Its drawdown, the profit ratio is 75 to 67. That's not a big deal when you look at this chart here. I'll talk about it in a moment. But a 30-day trade, average trade, ends up making just under 18 points, $18 per share on average. And if you see here, back in 2010, we had a $5.82 move during the pattern. Look at 2017, $64.44 move. All right, here's 18, 37.20, here's 19, 17.31. So Intuitive Surgical is showing a big move. And so for that, you know, what I can do is I can go in and immediately, let's go ahead and open up another page here for a moment, because I want to actually go to the options. And I'm going to look at some option chains on ISRG. So let's just type in the symbol. Let's take a look at what we got going on between now and again. What I like to do is I like to say, all right, where are we going? January 14th. All right, where's the closest option trade? January 15th. See it right there? All right, perfect. Let's uncheck the box for today. We're going to look at options that trade around January 15th. Let's do an update, and let's see what we've got. Calls on the left, puts on the right. This is not a cheap stock by any means, guys. You take a look here, you can see, I mean, the stock's trading at $729 a share. So this isn't something that we can just go out there and buy a call option on, because we're talking about close to $36 per call. That's $3,600. Definitely something we'd have to spread. Buy the lower, sell the higher, and push that trade, that risk, that cost, that break even down to a more acceptable level. Right? So that's how we do this. I'm going to do this again. We'll take a look at the money calendar one more time. Let's go back and let's view the month one more. And let's take a look at next week, the week ending December 11th. And I'm actually going to do the same thing. I'm going to look at the ranking. I'm going to re-rank by power meter. Here we go. Netflix is at the top. What is Netflix doing up here? So, help me out here, guys. When we see a pattern that starts in the middle of December, as we're going into the holiday season, why is Netflix even up there? Well, could it possibly be, first of all, are there still some people that actually go to work? All right, because most of us are working from home. But as we dial down the back half of December, the workload drops, the holiday spirit comes in, and more than likely, we spend a lot more time as humans entertaining ourselves as we go through the holidays, and part of that entertainment includes online subscriptions such as Netflix. That's why this pattern has done so well for the last 10 years. All right, you take a look at Netflix and you can see that this one's a 90% accuracy trade. Did have a loser 5 years ago. We'll take a look at that. But I want to see what's going on with this 30-day trade that ends on January 21st. So we see December 11th to Jan 21st. We see that, wow, the last 3 years, this thing is just cranked. There's the loser that occurred, and it was down $28 back in 2015. But every other year, this is profitable. The last 3 years, this tells me that the trend has definitely been trending in the direction of this particular pattern for Netflix. So from here, I've got my opportunity. It's December 11th to January 21st. The next thing that I need to do is go out there and find a trade that makes sense. So I can come up here, and I'm going to type in NFLX, and I'm going to go ahead and click on Update, and I'm going to look at Jan. Okay, so Jan 15 is the closest options we have right now for Netflix, because as you can see, we jumped from January 15th to February 19th. So let's look at those options as an example. I'm going to update us, and I'm going to come down, and we're going to take a look and see what's going on with Netflix. Here are the calls. Now, remember, this doesn't start until next week. I'm just prepping you. And so this can change. The price of Netflix can change as well as the price of these options. But what it's telling me right now is these at-the-money options, all right, the 490s are as close to the money as possible, $27.40. That's $2,700, all right, $2,740 to be exact, to buy a call option. Again, here's something else that I may be looking at spreading. Now, big question comes up. How do you determine which options to buy and which options to sell? Well, it goes back to the money calendar. You know, you look at that opportunity, and what are we looking for? We're looking for this number right here. Average trade. All right, so this makes it on average $21.75 during this move. So if the stock is likely to go up $21.75, and more than likely it's going to go higher than that because of what's happened in the last 3 years. This is on average has gone up $50 in the last 3 years. So we could put a target of 50 on today's stock price, or more importantly, when the stock when we're at December 11th. We take a look at this and we say, all right, where's the stock price at? We add 50 to that. So let's just assume right now that today is December 11th and the stock's trading right where it is now. I'll take 490. Let's add 50 to that. That's going to put us all the way out to 540. So 540 is our target. This could be the area we could sell. Okay? So I would look to sell at 540. And then maybe what we do is we come down here, and this might be a good example, buying the 530. So we've created a bullish call spread. And if I just come up and click on risk graph, this will give us some details. And the details we're looking at is now this is not a $2,740 trade. This is a trade that can be put on for right now $217. Now let me remind everybody who's watching the video. A, this is not a recommendation. B, this is something I'm going to be looking at on December 11th. I'm just prepping myself right now. But what I do know is that by creating that call spread, buy the lower, sell the higher, I can reduce my trade significantly. Now, I also noticed that this $217 cost is also the max risk, but look at the profit potential. Potentially, I can make 360% return on this particular trade if we max out going all the way into January. This is what the risk graph looks like, and it shows me that if the stock goes down, the most I can lose is what I put into the spread. But as it goes higher, this can get significantly better. Our reward to risk ratio is quite a bit. I mean, we're close to a 4-to-1. If you notice, and you call this one box, this is 1, 2, 3, nearly 4. This is a 3.6-to-1 reward to risk ratio on Netflix. So once again, when we look at the money calendar, and I want to go back and I want to show you the month one more time. So we go back and look at the month. What is the month telling us? The month is telling us that over the past 10 years, December has been a very good month to the stock market. As we see, it gets a little bit, 56 to 44 here on December 9th, 64 to 36 on December 2nd. But then as we get into the rest of the year, things look really bullish coming through to the Christmas holiday. So December is very bullish, number one. All right, what I want to do is I want to look at the trends in the market. Well, they're up as well. All right, so the only big significant news factor that we haven't factored in that's not on any calendar of mine is the certification of the Electoral College to certify the next president of the United States. That is to be done in the middle of December, and it looks right now, with all probabilities, that Joe Biden will be certified. The market is building that in, and so unless there is a hiccup there, the markets look like they want to continue the patterns that we see right now, which is technically bullish, seasonally bullish, and pretty much no news equals good news in the terms that we are beyond the earnings cycle. We'll be looking at earnings again as we get into mid-January. So that is my update when it comes to looking at the overall markets, looking at the calendar for December, and looking at my money calendar. Hey, thanks for watching. If you liked the video, please hit that like button below. It really does help support and grow our channel. Also, subscribing and dinging the bell will allow you to receive videos like this instantly as soon as we upload them. Finally, guys, check the merchandise out below the video here. Tom's Trading Room merchandise, the gift that keeps on giving. Have a great rest of your day, and we'll see you soon. Bye now.